Property, plant and equipment, investments, non-current debts, test of equity and testing of payables. So first of all, scope. Following balances are including in audit plan. So we will check building, equipments, improvements, vehicles, land, capital lease. Now we are talking about assets. So assets will be, you have building. This year you have extension in building. You add a machinery, you have put another machinery with it. So addition, deletion, land, equipment, this all will come in your scope. We'll do cave crop. We'll say transaction is complete, means there is an approval, then there is a PO, same like purchase cycle, it will go. We will perform analytical procedures because you have to see what is the industry type. Suppose this is a trading company and they are saying we have huge assets here. So first of all, you will analyze that why, like how, right? So analytical procedures will help you to understand the assets itself. We will reconcile the subsidiary ledgers with journal ledgers because asset register will have lot of assets and then the total balance will be in the journal ledgers. Analyze repair and maintenance. Are they too huge? Are they going to value it properly or not? You did a repair and you put it as asset addition. So we have to see classifications as well, valuation and allocation. Inspect record of purchases, vouch addition or disposal. Assets are really stringent, so we have to be very cautious about assets because asset no one can sell without a board meeting, without approvals. So we have to take the minute of meetings, board meetings, outcomes, management decision and analysis, so resolutions, this will help us to know. We'll test the depreciation. Sometimes depreciations are wrong in a normal day-to-day client, so we have to see as per our accounting standard depreciation is properly calculated or not. Does this asset exist? We will inspect because asset we can see from our eyes, right? Until it is not intangible asset. Intangible asset existence will be done in contractual way. Cutoff we will do, test the cutoff. We will see this plant, equipment is yours. You are the rightful owner of it or it will be someone else. So same way we will do. We will examine the title and leases. So I will ask who is the owner, property documents, lease documents, ownerships. So you have to bring all these documents to prove that this is your asset. Inspect the insurance policies in America, here also. All assets must be protected, fire insurance, hazards and other. So you will compare the duration, valuation, both from other ways. Property tax. In tax economy, you will also pay tax on assets, capital gain tax and others. So from their records, you can cross-verify the valuations. Does it really occur or not? You will is it properly classified or you put it in the purchase, right? And read financial statement disclosure. If anything, ask from the management that what is the detail of stuff. Moving forward, investments. A lot of big companies, they do investments, right? They have big money like Apple, Microsoft, and they invest in other companies or other projects. So when we do an audit for investment, we have to see that what is the non-current items. Are they investing in stocks, equity, interest? So as per accounting, they use equity methods, right? How they classify bonds, similar instruments. What are the current items? You have investment for trading, you have held for maturity till it finish, and you have available for sale, which you want to sell it, you classify as current. So we have current investment, non-current investment. In banking, other ways we create derivatives. This is in BEC, we will discuss more in detail. But any transaction in future, when we buy currency rate, commodity rates in advance, transaction will be settled in future, that created derivatives. So all big banks and some big companies, they invest money into futures, future transactions that create Of course, maybe as a normal auditor, you cannot be an expert of it, so there might be an expert derivatives calculators, right? Hedge means offset your risk against adverse price changes. So we do hedge accounting. There is a standard for it. Are we in compliance with that? This is we have to test. Revenue generated from the investment. So if you read revenue recognition, you will see it is recorded at fair value or market value. It has to be classified how. So this accounting knowledge will be checked here as the valuation and presentation. Special skill, I told you, this requires special skills and knowledge. So maybe you use a third party to, Assessment of control risk require considering whether controls are adequate or not. We'll see design of procedures based on risk assessment, because assets is manipulation, it has inherent risk. So we have to do the risk assessment also for hedging and others. Management intentions and abilities, we have to see intent and abilities. And for that we have to ask from management how they deal with such issues. So in terms of cave crop, he says completeness, perform analytical procedure, reconcile, evaluate, recalculate sometimes, because this will help us, any errors will come out, valuation and allocation, and vouch the recorded amount. So same procedure we have to opt for investment audits. Determined any unrealized gain and losses are properly accounted for. So it has to, here you should know, it will come in other comprehensive income statement, it will come where, so this is accounting knowledge. Then vouch recorded cost for held to maturity. Determined transfer between categories is fair value. Sometimes you have an asset held to maturity, then you broke the maturity, you put it available for sale. So when you transfer between two categories, it's allowed. What is the US GAAP requirement? This is you have to check also. Inspect records, obtain audited financial statement from investee also. The one is investor, one is investee. So both will, of course, my investment in your company, you also have a ledger for me, right? So both will cross verify. Evaluate the goodwill for potential impairment. Goodwill not for small company, big companies has goodwills, means difference of purchase price minus net assets. That will create a goodwill. Goodwill two ways. This is in goodwill accounting you will study. One, goodwill never goes down, so no impairment. One goodwill is for if you are a film star, you are Michael Jackson for example, your voice has limited years, so your goodwill has impairment, right? So this is how we see life, useful life, infinite or finite. No goodwill will stay in for so long, so we will do the impairment test for it. Then we see it really exists. Physical inspection is possible. We will do cutoff, we will do after 7 days, 10 days transactions. It is really our investment in our name. We will trace the dividend and interest revenues. It's really occurred, and then we will do the vouchers to record the documentations. Classification, like maybe it is held to maturity, you put it available for sale, right? So you have to see according to right qualification, you have to read the financial statement, disclosures should be adequate, refined. If you are confused or you have some observation, make inquiries from the management and take representation letters from them. These are complex areas, investment. This is not a simple audit, but still as a CPA, we are capable to do that after reading your accounting and auditing. Scope, now current debts, non-current debts, which are long-term nature. So any money that we have taken for more than 1 year, either from bonds or some other instrument, that will be your non-current obligations.